Today is Wednesday, March the 3rd, and I haven't been around much. The bulls are giving up to the bears here. The bears are definitely in charge. This is what we talked about, this complex pattern forming in the McClellan oscillator, definitely below the zero line, and this could go on for a little bit longer. But, you know, the news isn't all that bad. Let's just take one look at today. Today was about almost 2-to-1 decliners over advancers. Volume consistent. The market tried a little bit of an escape and then failed. NASDAQ is where the action is taking place, and it's NASDAQ that's hurting particularly. So if you look at the NASDAQ, we have this large candle down today, and we're in the cloud. And the Chiku span today hit this low point, if we draw that green line, and that's not quite support on the 50. That may come tomorrow or the day after, and we look for that to be important. So let's just draw that, and let's take a look at that tomorrow. Now the Dow Jones isn't looking as bad as the NASDAQ. It's still above the 50. The volatility index took a bit of a jump today, and the S&P was down 1.3%, but is still getting support on the 50. And we looked at that a few days ago. We had support back here on February the 23rd. We dropped below the 50 on February the 26th on Friday. And let's go back to our regular candles. Let's go back. Oops. Just get rid of the RSI bars. And you can see that we finished the day here on the Friday on the 50. And today we ended up and we closed on the 50, exactly the same point as Friday. So from the S&P point of view, it's not all that bad. But the tech stocks like Apple just got hammered. The infrastructure stocks, Caterpillar, pulling back a little bit. Deere, support on the 8. Home Depot had a red candle day on the RSI bars. Left a big gap back here. So Home Depot looks like it could be coming into a bit of a buying opportunity for people who like Home Depot and who liked it up around 292 are really going to like it down here now around 250. So keep an eye on Home Depot as a bit of a value stock. Now JP Morgan and the banks, if you look back on FinViz, the banks had a really good day today, pretty much, and the industrials for the most part were pretty good. Energy was strong today. So we're really in a sector rotation where technology, communications, consumer cyclical are really getting hammered. Let's take a look at these red areas here on a weekly basis, and you can see pretty much the same. So the last today and the past week has been the same. On a weekly basis, the banks have done fairly well. So keep an eye on the banks. Let's just take a quick look here before we go at the banks, and let's look at Bank of America. Let's take a bigger look here. Let's look at the 1 day, of course. And you got Bank of America making relative new highs to this time frame from 2015. Goldman Sachs making a new high. JP Morgan, not a new high, but having a pretty darn good day. And the XLF overall, so the financials, and U.S. Bank, the largest regional bank, that's why we keep an eye on it, came back and found support on the 8, but it's not as strong as the other banks. So bottom line is that we have definitely have the bears in charge. The S&P could be due for a bounce. I'm not calling a bounce, but the 50 now has been support ever since the 23rd. So 1, 2, 3, 4, 5, 6, 7 days. And if we go back to January the 29th, we had support on the 50. So keep an eye on that. The Chiku span is still found its support on the 8, but is below this candle, and we could come down and test this flat cloud, but I wouldn't be panicking yet. I'm sure you're seeing your net liquidity in your accounts dropping, but just think of it as being an opportunity to buy, just not tomorrow.